You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again. It is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. It is time once again for TWIFO, This Week in Futures Options. My name, of course, Mark Longo from theoptionsinsider.com. As well as, of course, from the ever-exciting, at least we tend to think so, Options Insider Radio Network. Remember, if you like what you hear on the on-demand side, no matter where you get it, your Apple, your Googles, your Spotifys, your Stitchers, your smart speaker, wherever you get the show. If you like what you hear, do try to rate and review on the platform of choice. It does help all the new folks continue to discover not just this show, but everything we're doing here on the network. Been going for 15 plus years. August, yet another record month for us. So we'd love to see all the new folks discovering the content. Your ratings and reviews, particularly the more recent ones, clearly have a strong weight with the algorithm. So if you like what you hear, keep rating and reviewing. And of course, if you want to go above and beyond, you want to get some exclusive content in your life, perhaps you want to ask your questions live throughout the shows, throughout everything we do here on the week. Maybe you want to win a fun, fabulous pro trading crate or two. Theoptionsinsider.com/pro is the place for you. As we keep on rolling, it is time to unleash the beast, listeners. You know, I love all of our guests we have on the show. It's always fun to have them rolling through the CME Group and FTSE Russell hot seat. But you know what? When there's no guest, that means I get to choose when we roll out the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody. Welcome to the Movers and Shakers Report, the portion of the program where we break down everything moving to the upside, aka the light side, and to the dark side over there at CME Group since our last show. And you know what, listeners? This report is starting to look a lot like the reports we used to see until these last couple of weeks, last month or so. We started seeing all this topsy-turviness. We saw a dark four. We saw a crazy top three last week on the show. This week, we're back to pretty much a good old-fashioned 50-50, half light, half dark. The dogs and cats are once again living together here, listeners, on the show. So I have an easy choice this week. It doesn't really matter which way I go. Let's start. I'm going to shock the world. So I'm going to go to the light side first. Number 5 on the light side this week, our old friend Chicago Wheat, a.k.a. SRW Wheat. You know, it's been an interesting couple of weeks out here for wheat. Of course, Ukraine driving more action out there. Russia maybe hemming and hawing on their wheat deal out there. So causing a little bit of turbulence in the ag markets. And wheat reflecting that this week, up over 4.15% from our show last week. It was also number 1 to the light side last week, up nearly 6%, 5 2/3% last week. So a strong couple of weeks here for wheat. You know, SRW Wheat does some papers. We could certainly hang our hat out there. Number 4 is lumber, up 4.2%. Again, one of our frequent offenders. We love lumber for how much it moves, but we hate lumber for the fact that from an options perspective, it is almost completely negligible. It really doesn't exist. So unfortunately, I would have loved to sink our teeth into lumber many times over the last couple of weeks, but you can't really parse 2 or 3 contracts, listeners. It's just nothing to see out there. Number 3, a product category we don't sink our teeth into that often. Maybe it's time for a foray out there this week. It is Class 3 milk, dairy, making it on the movers and shakers this week, up 6.3%. And, you know, it's not SRW wheat, but it's also not lumber. It's somewhere in between. It's got about 3,000 contracts on the tape right now. So we've certainly analyzed less. Perhaps we shall make a foray to the land of dairy. We shall see. Number 2, listeners, out to the metals. It is platinum, up 8.07%. That one, 390 contracts. So a little bit less skin in the game for platinum. And then number 1, another P named precious metal. We've got palladium, up 8.83%. And before you get all hot and bothered about breaking down palladium on the show, we looked right before showtime. A whopping 1 contract on the tape this week, listeners. So, alas, unless you really want to sink your teeth into that one lot, not going to be hanging out in palladium this week. All right, to my usual stomping grounds, to the dark side we go. Number 5, let's get rough. Rough rice in particular, off 3.17%. We don't normally hang out there, and that's probably because it's done 389 contracts so far this week. So I guess you're kind of talking numbers like the Bitcoin options used to do, but not a heck of a lot of paper out there. Number 4, our old friend Brent, the future style margin for Brent, off 3.57%. Again, before you get your knickers in a twist, 567 contracts out there, so probably not hanging out in ye old Brent. Our old friend number 3, WTI, back on the movers and shakers this week. Good to see them back up there, off 4.9%. Good to see some names with some actual paper behind them on the movers and shakers this week. Number 2, another frequent offender. Maybe you have to hang out there. It's going to be an interesting week this week, listeners. Lean hogs, off 9.54%. It was number 3 to the light side last week, up a whopping 1.26%. That was in our top 3, our light 3 last week. We can only get 3 for the light side last week, listeners. And again, lean hogs putting up some numbers, 16,000 contracts. So that's more than silver usually. So do we dare do dairy and lean hogs on the same show, listeners? Who knows? Getting crazy this week. When the cat is away, the mice will play. And I'm going to play today. Number 1, we've got nat gas, off 13.76%. Man, they are coming for nat gas. That certainly has been the lead story. As much as wheat has been a talking point around Ukraine, of course, all the pressure shutting down the pipeline for quote-unquote maintenance, putting the pressure on Europe to build up their reserves. All that madness has certainly been top of mind for a lot of folks out there in the futures options world this week. So I think we're going to start in the energy first.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody, welcome to the wonderful world of energy. You guys know where to go to find all these reports and a whole bunch more. Your journey begins, cmegroup.com/TWIFO. Once you're there, go into the asset class drop down. I'm going to go 3 notches to energy. Then we're going to go down 3 more in the product family to nat gas. And that's where we will begin our journey. If you pull that up, you'll see it has a 7 handle right now. 793. Haven't seen a 7 handle in a little bit out there in nat gas. Hence its number 1 spot to the dark side this week. They're coming for it. It's off nearly 10% just this week, 9.7%, or about 85 cents just since Monday's session. So, and of course, off nearly 14% since the end of our show last week. So we were talking about, 10 and 12 and even some 15 handles last week. This week, I'm seeing a lot of 3 puts on the list yet again, even though they got some 20 calls out there as well. So it's a bit of a mixed bag. How much of a mixed bag? 303,000 contracts. So, of course, this is a truncated holiday week, listeners. Usually we would see over 400,000 contracts this time of the week. Right now, 303,000. But again, we were off for the Labor Day holiday earlier this week. And nat gas looks like the lion's share, pretty much exactly a third of that paper going up in the October contract, listeners, that has a nice, healthy 19 days to go. So we're going to hang out there this week, listeners. Again, we're at about a 793 in that front future of the vol. In nat gas right now, about a 74, almost 74 and a half, up nearly 4 points in that OC contract. Looks like the rest of the term structure of the vol is actually coming in. So that's kind of interesting. You go out 1 month to November, and that vol is an 81 3/4 is actually off about a third of a point. So the vol is higher, but also coming in a little bit this week. So kind of interesting out there. In terms of skew, that's some big moves in the skew this week, listeners. Last week, the puts 0.6% rich. So they're pretty much half a point bid over the at-the-money vol. This week, it swung the other way, nearly a 6% discount, 5.9% discount out there for the puts. The calls last week, 2.1% bid. This week, 5.7% bid. So they're coming for the puts. They're bidding up the calls. You might be surprised by that because it's selling off. But then again, that is what you could normally expect when you see a product moving along its skew curve, whichever direction it's moving in, to the upside, to the downside. It's as long as it's a steady, not exactly surprising move, then you're probably going to see that wing that it's moving towards come in a bit from a vol perspective, and the other side get bid. It's kind of like a bit of a rotation, if you will, of the skew curve. And of course, you can look at these numbers here that Nick and his team put out, the shift and slide. We don't get into that too often because that's kind of getting deep in the weeds for a lot of people out there, but it's a fascinating tool. And if you're curious about it, check out the TWIFO reports and click on it for a little bit more info. And of course, if you want the pro version, Bantix, BANTIX.com is the place to go to learn more. And again, if you're checking out these reports all the time, you want to learn more about these products, you owe it to yourself to check them out over there at Bantix.com. They're really putting out some great content, and it goes above and beyond just the TWIFO. The TWIFO report is just the beginning. You're just scratching the surface here of what they have to offer for you over there. And in terms of the action this week, listeners, looks like it's a bit of a fist fight here for the number 1 spot. Looks like, though, the 6 puts going up in October this week are going to take it by a few hundred contracts. 10,800 of these 6 puts. These are pretty active, actually, all week long. Obviously, no paper on Monday this week, listeners. So the big day was Wednesday, 5,300 on Wednesday, 3,700 more trading today, and 1,700 on Tuesday. So pretty active throughout the week. Slightly opening, I guess you can say, on Tuesday and Wednesday, slightly. Of that 5,371 contracts on Wednesday, only 15 were opening. So not exactly like a huge opening partay on that strike, but still intriguing stuff here. 6 puts. That probably wouldn't have been my first choice. That's why we run the reports. That's why we do the show, listeners, so we can find out what is actually lighting it up out here this week. And then right behind it, we have the November 12 calls. So bit of a funky strangle / risk reversal, and it's got a bit of a diagonal component too, obviously, because they're separate expiration months. And they were right behind it with 10,300 contracts. So 6 puts and the 12 calls fighting neck and neck for the supremacy this week. Again, the 12 calls were out there in November, so a little bit longer term, doing about 10,300 this week. The big day for those was Tuesday, 5,500, 4,500 today, only a couple of hundred on Wednesday. It's like these were closing, so that makes some sense. Taking off the 12s when we're retreating a bit makes a wee bit more sense out here, but intriguing stuff. 6 puts in October and 12 calls in November. Interesting stuff. That's why we run the numbers, listeners. That's why we have to listen to the show every week to see what the heck is actually lighting it up out here. Let's dig in a little bit too. Also, the 10 call is pretty active this week. 5,200 going up on Tuesday. So it looks like those were closing as well. So maybe there was a 10-12 vertical that was coming off on Tuesday. It looks like a lot of paper was going up. Actually, it looks 5,000 was kind of the number across the board for the 10-10 calls. The 10.10 calls, listeners, as well as the 12.10 calls also did 5,004 each. So it looks like maybe someone took off a 10-10, 12-10 vertical, perhaps. It was just an interesting paper across. Lots of 5,000 lots going up on Tuesday. By the way, if I say Monday throughout the show instead of Tuesday, it's just old habit. And in terms of, 7,600 of the 10-10 calls trading this week, including 2,500 again today. So interesting strikes afoot out here. If you don't like the 10s, how about the 10-10s, listeners? And then also in that front month, the October contract, we also have 7,300 of the 10 even calls going up this week. It's like they were mostly closing throughout the week. The big day, though, is today. So obviously we don't know the OI swing for today. 4,100 today, 2,100 on Tuesday, about 1,100 yesterday, closing throughout the earlier portions of the week. And then once again, I talked about this with Carly Garner, a few other guests. It looks like this 3-put time strip, call it what you will, is going up yet again, listeners, 2,450 times. We have the 3-puts trading in April, 2,450 times, and in May, 2,450, and in June, and in July, and in August, and in September. Does it keep going? Yeah, it goes all the way out to October, actually, of next year. 2,450 across the board. So once again, this, and you know, the weird thing is, once again, they're trading throughout the week. It is not one day. It is not one big print on, let's say, Tuesday on all of them. They are trading pretty actively throughout the week. And for example, the October 3-puts of next year traded 2,570 times this week, 1,410 today, 760 on Wednesday, and 400 on Tuesday. So these funky time strips continue to go up, and they continue to be actually back and forth, opening to closing. I'm looking at the 3-puts in June of next year. They traded 1,350 times today, 700 on Wednesday, 400 on Tuesday. So they were closing on Tuesday, but then opening on Wednesday, and then a lot more going up today. So back and forth paper on the 3-puts. I don't know what is going on with these strikes, listeners. I have delved into it. I've talked to folks about it. I can't really dig up hide nor hair why this funky time strip is going up. We'll keep an eye on it. It's obviously going to keep trading. We shall endeavor to get to the bottom of it for you, listeners. As we keep on rolling, since we're hanging out in energy, let's also visit our old friend. Haven't really had a chance to sink our teeth into him for a while, but he is back on the movers and shakers this week. Number 3 to the dark side, off nearly 5%. It is our old friend WTI. They are coming for energy yet again this week, listeners. WTI, when we came into the start of this segment, 83.42 in that front future. That puts it off about almost 3.5 handles on the week, or nearly 4%. So a lot of that sell-off in WTI coming this week. Of course, nearly 5% if you go back to the end of our show last week. How much paper on the tape? WTI is delivering. This is a normal week's worth of paper they've already put up, 433,000. So they're making up for that truncated holiday trading week this week. And of that 433,000 contracts, nearly 40%, 39% going up in the October contract. So we're going to hang out there. What is the vol right now in WTI, you may be asking? It is almost a 51 in that October contract, 50 and about 3/4. It's off a little over 3 points this week. So that vol coming in, again, it's kind of depends where you're looking on the term structure. The vol is kind of ebbing and flowing. The front SEP contract that has a day to go, that's not really vol. That's ticking up a little bit. You go out a little bit farther to the week 3 SEP contract, also ticking up a little bit. Then you go back out to the November contract, and the vol is coming in a little bit again. So it kind of depends where you're looking. You go all the way out to next year. You go out to April, vol's up again. So term structure is ebbing and flowing as we speak, listeners, which makes it kind of fascinating, which is, again, why you should be checking out these reports, listeners. But out here to October, the vol is a 50 3/4, off about 3 points. The skew. Last week, the puts 3.5% bid. This week, 2.4% bid. The calls 1.6% cheap. This week, 3% cheap. So the calls coming in, the puts coming in a little bit as well. In terms of the action out here this week, Again, it looks like a bit of a fist fight as well. But if you guessed the D's pars, then you are the winner chicken dinner this week, listeners. Nearly 18,000, 17,938 of the December 100 calls have gone up this week. It's been kind of fast and furious throughout the week. 88 yesterday, 74.53 today, and about 1,600 on Tuesday. Opening throughout the week, I know this number still remains a very important level, a very important psychological level, the par strike, obviously, for WTI. So not exactly surprising that it would light it up. Maybe a little bit surprising that it's this week where we're in the height of a sell-off yet again, that we're seeing the par strike lighting it up. But once again, we're seeing that action. Thankfully, again, we talked about it with Scott on the show last week. I don't see, at least in December here, I don't see the 1 point wide verticals because they were verticals. We speculated with Russell a couple weeks ago. Maybe it was just a stupid and they were trying to get the half strike. No, they are buying one and selling the other. So it is definitely a quote unquote vertical, 1 point wide. And once again, the paper mystifies everyone we bring on these shows here, which is always kind of fun here. So nearly 18,000 of the pars. And then right behind it, I said there was a bit of a fist fight for the top spot. We have about 17,000 of the OC 95. So a little bit closer to home strike here. 16,705 to be precise. The big day, once again today, 9,514 of these 95s going up today. And then we've got 2,810 on Wednesday and 4,381 on Tuesday, opening earlier in the week. Obviously, we don't know about today. So action on the 95s. And then right behind it, hot on its heels yet again. So we have 17, almost 18,000 of the pars, then almost 17,000 the 95s, and then a little north of 15,000, 15,300 to be precise, of the 80 puts, also in October, lighting it up this week. And again, pretty active all week long. 5,500 today, that's the busiest day. 5,100 on Tuesday, 4,700 on Wednesday. And again, we are threatening that 80 handle, so makes a little bit of sense that we are seeing the 80 puts lighting it up out here. But still, intriguing paper, and also a lot of paper lighting it up out here in WTI this week. I'm just going to scan around really quickly, listeners, to see if I can see any more of those funky verticals. How about the 70 puts in October? They were pretty active this week. Nearly 5,000 of those going up. Trading pretty much every day this week, opening. So 70 handle by October, listeners. What do you think of that? Or perhaps harvesting a little bit of the old risk premium. I think that's a bit of a bridge too far. What are your thoughts? Can we get to 70 by October expiration? That would certainly be quite the move. Or how about the 150s, listeners? How about the 150s? D's of 2023, trading 1,200 of those bad boys. And once again, it's not one print. It's trading throughout the week. 600 today, 400 on Tuesday, 200 on Wednesday. So a lot of folks piling in to the 150s. Looks like we might have had some 125, 150 verticals going up on Wednesday and today. But on Tuesday, it was just straight up 150s trading. So yes, intriguing stuff afoot. Thankfully, I do not see the 1 point verticals. But I'm sure if past is prologue, listeners, they will return as we keep on rolling with the show out of energy. And, we had some action in the ags, and that is kind of the other pole of the Ukrainian conflict. That's where we are seeing most of the market impacts. So let's head on into the ags next.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, everybody, welcome to the wonderful world of ags. Get into that drop down and pop it up all the way to the top because it's an alpha order list after all. Go into ags and go into the grains and oil seeds. We're going to hang out in good old SRW wheat, a.k.a. Chicago wheat, a.k.a. number 5 on our movers and shakers to the upside this week, up 4.15%. And doing some numbers this week, listeners, nearly 100,000 contracts on the tape, 97,000 to be precise, on a truncated holiday week. That is nothing to sneeze at in the land of Chicago wheat. By the way, where is wheat right now? 832 and a quarter in that front future. That's up 21 handles or 2.5% just this week, and obviously up over 4% since our show last week. Again, with all these rumblings coming out of Eastern Europe, they're not surprising. We'll see a little bit of tumult here in wheat. And of that nearly 100,000 contracts, 56% going up in the DEES expiration cycle. So we will hang out there. The vol in wheat right now, just a tick shy of a 40, 39.94, up 1.07. So again, we were saying it on the show over the last couple of weeks. If you're not enthused by the levels of vol you're seeing in some other products, whatever it might be, metals, equities, whatever it might be, the ags are coming with nearly a 40 vol right now in Chicago wheat. So intriguing stuff. Skew-wise, last week the puts 7% cheap. This week, 8.1% cheap. And the calls, nearly 12% bid last week, 11.8% bid. This week, 6.9% bid. So the put's getting cheaper and the call's getting cheaper, which is interesting because the vol ticked up, but both wings, the extremities of the wings, coming in. That's certainly interesting. Let's see what kind of paper we're seeing out here. I might explain that. It's the 900 calls that were leading the dance. These are clearly out of the money calls, listeners, doing 9,100 contracts. The lion's share of that Wednesday, 6,800 on Wednesday, 1,200 today, and about 1,000 on Tuesday. Back and forth opening to closing throughout the week here. So interesting, given the fact that we're seeing so much of that vol collapse in that call wing. Probably some paper on the sell side. Also, we are moving up the skew curve a little bit, like I said before. That's also going to bring in some of the call wing as well. 900 calls, the big dog this week, followed hot on their heels by the 1,000s, the pars out here, doing 87.62 this week. Almost all of that is on Wednesday. Wednesday was a big day for Chicago wheat listeners, kind of across the board. 73.51 on Wednesday, about 1,000 today, and not even 500 on Tuesday. So pretty much all Wednesday, all the time when it comes to the wheat listeners. Let's scroll around a little bit, see if we see any other paper. 1,100 calls, doing nearly 7,000 contracts this week. Again, 5,700 going up on Wednesday, most of that opening. Once we get out of that, also 900's also active here in the October contract, doing about 3,200 this week. Pretty much, actually, today was a big day for those. 1,700 today, only 800 on Wednesday, and about 700 on Tuesday. So intriguing stuff. It kind of is all D's and all calls all the time out here in the Chicago wheat this week. You know, corn didn't make our list, but we haven't had a chance to parse it too much on the show of late. So since we're hanging out in the ags, we'll save you a trip, listeners, and swing in there really quickly, see how much paper is going up in yield. Corn, underlying wise, not exactly lighting the world on fire this week, up about 0.5%, but doing some decent paper, 309,000 contracts. Again, we are on a truncated holiday week, listeners. That's some decent paper. Again, corn is usually the number one recommendation for folks who are looking to maybe dip their toes in ags. They're probably coming from the more traditional markets of your equity options. They want something that's a little bit analogous and actually does enough paper to sink their teeth into. Corn certainly filling the bill out here right now. The corn front future 669, listeners, up 3.25, again about 0.5% on the week. But of that paper, of that 309,000 contracts, nearly half yet again, 49% going up in the D's contract that has a whopping 78 days to go. The ags, you know, they like their certain trading cycles, and D's is clearly on the radar for wheat and corn traders right now. The vol in corn right now, 28.5. So again, that's north of what we're looking at. And let's say a VIX right now as well. So intriguing stuff, up 0.5 point this week. Skew, pretty big moves in the skew this week as well. Last week, the puts 12.3% cheap. This week, 3.9. So the puts coming in, getting some vol back again. And the calls last week, 11.2% bid. So dramatically bid, especially when you're starting with only a 28 vol to begin with. Another 11.2% on top of that. That's a lot. And then 2.8% bid this week. So the puts have gotten some of their juice back, and the calls have given up the ghost. Let's see what kind of paper we're seeing out here. And again, it's the 700s. 700s going up in December that are leading the dance with 20,000, pretty much exactly 20,004 to be precise. Trading all week long. The big day was Tuesday, 12,271 on Tuesday, almost all of that opening. So a lot of 700 call paper opening in December. In corn, 5,200 on Wednesday, slightly closing 2,500 today out here. That's followed hot on its heels by the 7/2, 16,500 of those. Again, the big day was Tuesday, 11,659. Most of that closing, so maybe a bit of a roll down from the 7/2 to the 700s, listeners, which would make some sense given where we're trading right now at around the 670 level in corn. Maybe some folks trying to get a little bit closer to the fire, a little bit closer to the action out there. 3,500 going up on Wednesday, 1,200 today. Obviously, we don't know today's OI levels And then behind that, we have kind of a tie for third place with the 600 puts here in December doing 13,640. The big day for those, Wednesday, 5162, 4,300 on Tuesday, 4,100 today. Back and forth opening to closing. And I said we did 13,600 of those. Right behind them, 13,571 of these 700 calls going up in October, listeners. Those have a whopping 15 days to go. A little bit closer to the fire there as well. And again, the big day for those was Tuesday, 6,100 on Tuesday, 3,400 on Wednesday, 4,000 today, and mostly opening throughout the week. So opening again on the 700s in both December and October here, which again is kind of interesting and also getting a little close to where we're trading right now. So for any other interesting or aberrant prints, don't see any, listeners, as we roll on out of the ags and head on into the equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
It's like our live chat is surprised that I went to the light side first. Yeah, I'm full of surprises. You guys don't know me. You think you know me, but you don't know me. Got to mix it up sometimes, right? Let's get on out to the wonderful world of equities, listeners. Go down from the ags, go down another 3 spots to equity indexes, hang out in the U.S. index E-mini. We're going to swing on out to the Russell 2000 as well. We can do the S&P E-mini if you want to just talk about blasting away puts. We'll see. Maybe we can find some fun prints in the E-mini today. But right now we're hanging out in the Russell 2000. Before we even get there, let's set the table from a vol perspective. And, we are seeing one of those kind of whipsaw-y days in the market. Let's see where we're hanging out right now. We're back up again. Well, we were back up. We're still up, but now we're getting closer to unched again. So it's a very, very whipsaw-y day, listeners. That means vol is down, but not down as much as it would have been, let's say, earlier in the session today, listeners. We're at about a 28 2/3 in RVX, which is, of course, the VIX of small caps. That's down about 260 from last show. The VIX itself, a little bit north of 24, about 24.15, down about 2.5 points from last show. VVIX, 86.25, down nearly 4 points. Vol Q, 29.1/3, down about 2.1/3 points. That puts that VIX to RVX spread at about 4.5 points. That's actually slightly tighter, about 1/10 of a point tighter than it was last show. And the VIX to Vol Q, so the NASDAQ to S&P 500 vol spread at about a 520. That's about 0.2 of a point wider than last show. So they're both hanging out at relatively the same level to where they were this time last week. Let's get on out to small caps again. About a truncated holiday week, still about 15,000 contracts on the tape. So nothing to sneeze at out here in small caps. Where are the small caps right now? They have been moving and shaking. If you've been listening to our option block show, we mentioned the volume in small cap related names like IWM has been surging. So interesting paper out there. Let's go into RUT now. And of course, 1838 and about a quarter is where we're hanging out in the small caps. Actually up right now about 30 to actually 29 handles on the week. So up about 1.6%. Actually, if we ran the numbers, it would be not quite in our top 5 for the light side. It would be number 12 for the Russell 2000 this week, up about 1% from our show this time last week. So a little bit outside our top 5 for this week. In terms of action, though, of that, it's about 15,000 contracts, 28% going up. In the SEP contract, that has about 8 days to go. It's sometimes inescapable, listeners. You got to hang out in the weeklies and the equities. That's just where all the paper is. So we're going to have to hang out there in the SEP contract that has 8 days to go. We're at about a 27 vol out there, actually in about a point right now. So a little bit shy of what we were just talking about with RVX. In terms of skew, last week, the put 6.4% bid. This week, 6.9% bid. The calls last week, 5.9% cheap. This week, 7.4% cheap. So calls cheap, puts are bid. Pretty much what you'd expect. Even though calls not as cheap and puts perhaps not as bid as you might expect. You get a little bit farther out into the term structure. You get out there, listeners, into November. You're looking at a 16.5% bid to the puts and a 12.1% discount to the calls. So those weeklies, by comparison, are somewhat cheap, at least from a put perspective. And the calls are not quite as cheap as they should be. So intriguing stuff afoot. And it's the 1810 puts that are leading the dance out here this week. So an interesting strike. That's about, 28 handles out of the money right now. doing nearly 1,000 contracts. That's the big dog out here this week. Pretty much all of that was on Wednesday. And then right behind that, we have the 1,700 puts. These are in September, so a little bit longer term. They go out a whopping 22 days. These doing about 500 contracts this week. Looks like we have a bit of maybe a roll down, the 1,700 puts to the 1630s, 500 times. So also you have a 1780, 1870 vertical going up 250 times on Wednesday as well. So weird paper afoot out here. I suppose it could be a ratio type four-way, but the strikes are strange if that is what they're up to out here. So weird paper afoot out here in the Russell 2000, which we've come to expect out here. Don't see as many of the quote-unquote small delta calls as you folks are typically intrigued by, and certainly were in the huge run-up there last year in the meme stock palooza. If you're going to see another meme stock leg up like you folks were voting in our poll a couple weeks ago, we probably would see more of those small delta calls in the Russell 2000. Alas, that's not the case this week. And since we're hanging out in the equities, let's go visit our friend, the S&P E-mini. 2.7 million contracts on the tape in this truncated holiday week. So the E-mini is playing ball this week. I'm sure a lot of that coming today, hot on the heels of this just crazy whipsaw action we're seeing in the equities today, listeners. So of that 2.7 million contracts, 21% going up in the contract that, of course, expires tomorrow. And if you had to guess what it was, S&P right now 39.90. Oh, it's the 3,400 puts doing 58,000 contracts. And then we have the 3,400 puts going out in 4 days doing 60,000 more. It's endless, listeners. And we actually have some somewhat relevant puts, the 39 half puts going up today, nearly 30,000 times. So these are going away in a few minutes. So clearly this is the same type of trade, a premium harvest, but clearly they're playing a little bit faster and looser with these trades now. Like the other ones, they're going out in a day. Those are 500 points to go. These are only 40 points. So I've seen this movie before, listeners, and it often ends badly. When you're migrating that much closer, try to get a little bit more premium right before expiration, you are literally picking up the nickels in front of the steamroller. So, hey, it works until it doesn't. As long as you have a plan for when that second shoe drops and when the worm turns, you'll be all set. But again, it obscures some of the actual paper we have going up out here. Let's go a little bit beyond that stuff. Let's see what we can find, listeners. 34 half puts going up 20,000 times. Here's some 4,000 calls doing a whopping 3,500. Let's go out here. 35 10 puts in September, 12,000 of those. It's just a whole bunch of that stuff. 3,600 puts here, week 4, September, 10, almost 11,000 of those. All the size prints are just that stuff. Well, here we go, listeners. 41 half calls. Week 3, November, doing about 14,000 contracts. So 41 half, that's a bit of a run here. 88.80 on Wednesday, 5,000 today. Pretty much nothing on Tuesday. So all of that paper, all opening today. So someone really piling in to the 41 halves. Must be a misprint. It says the next most active trade out there was the 100s, the literal 100s. I don't know who's trading a 100 call 1,800 times, but it looks like those were printed. I'm guessing that's a typo out here. Also followed by the 37 half puts, about 12,800 of those actually. So the big day for those, Wednesday, 7,200, 5,100 today, and 500 on Tuesday. This is a fascinating product, listener. I've never had such a hard time. With nearly 3 million contracts on the tape, you'd think there'd be a lot to parse. And instead, everything is just dwarfed by this premium selling palooza. If we go out a little bit of a ways, that's like about all she wrote. 41 halves also active in the D's contract, only about 7,000 of those. So someday we'll have to just go and add up the numbers for exactly how many of these puts are being sold. It's clearly many hundreds of thousands. The exact total, I do not know. But intriguing stuff afoot here. Here's a little bit closer to the fire. 3,800 puts. These are going out in a little over 8 days. So those have traded 28,529 times this week. Unlike the others, it's not all one print. It's kind of back and forth throughout the week. 12,000 on Tuesday, 8,000 on Wednesday, 8,000 again today. Back and forth opening to closing. 3,800 is a little bit closer to the fire there. So I don't expect those to be just a straight up put palooza. And clearly they're opening and closing, so a lot of back and forth trading on those. But my goodness, you folks out there slinging the E-minis out there, listeners, have you delved into these? I should look really quickly. Let's pull up the micros really quickly as well to see what's going on out there. And you know what? Not a ton of paper. 23,000 micros going up this week. And of those, the big dog, 3,900 puts doing a whopping 559. That's the big dog out here in the micros this week. So the micros, I know the micro futures have been lighting the world on fire. The micro options, not so much. 559 of the 3,900 puts, 558 of the 3,800 puts. All these going out tomorrow. That's the big dog out here in the micros. So for whatever reason, micros not really resonating with the folks. Listen, I promised you some weird products. Let's get into some of those now. Maybe we'll hang out in the dairy next.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, listeners, I apologize for backtracking. We have to go back to the ags. That's where the dairy hangs out. The ags is actually a very broad and far-encompassing category. It's not just corn and wheat. You have your dairy in there, and you also have your livestock. So we're going to be hanging out in the ags for the rest of the show, it seems like, which is interesting. But we'll hang out here. Good old Class 3 milk. Again, number 3 on our movers and shakers this week, up 6.3%, and about 3,000 contracts on the tape. So we could actually parse a little bit out here. By the way, where is fluid milk, Class 3 milk, you might be asking yourself right now? It's at a 1979 in that front September future, and you go out to October, it gets to 2061 out there. And that's where we're going to be hanging out. We're going to be hanging out in the October contract, listeners, because it did 21% of that, about 3,000 contracts this week. What is the volume, you might be asking yourself, in Class 3 milk? Well, a little bit lighter than what we were just talking about, 20 3/4, off about 3/4 of a point. So coming in a little bit right now. Skew-wise, the puts last week, 4.2% bid. This week, 1.8% cheap. So a big swing in the puts. The calls, not so much. 1% bid last week and about 0.2% bid this week. So calls not moving as much as the puts. And in terms of action, that was the 18.5 puts. So I said we're at about a 1979, that front future, and out to October, it's 2061. It was the 18.5 puts. So over 2 handle out of the money puts, doing about $1.50. That was the big trade out here. All that today. So a lot of paper piling into the 18.5 puts in Class 3 milk today. And not to be outdone, listeners, we have the 16 puts going up in this contract as well. That has, a nice 54 days to go. We got 100 of the 16 puts going up. Looks like they have one of these time put strips going up out here as well, because we have 100 of the 16 puts going up in November here, opening. And we have 100 of them going up in December as well, also opening, all on Wednesday. And then we have, only 50 going up in Jan of next year. Again, opening. So, yeah, it looks like we got some these funky time strips. Apparently, these are a thing now, listeners. Intriguing paper. We have 50 lots going up in Jan, in February, and in March, and in April, and in May. And in June, actually, of next year. So, wow. Intriguing stuff. That probably accounts for why there's so much paper going up out here. Strange prints afoot here, listeners. Have you ever traded a time put strip? Why would you? These are the questions. Why would you do a 1 point wide vertical? Why would you do these funky time put strips? These are the questions of the day out here in the world of futures options, listeners. And not to be outdone, since we're hanging out in the ag, let's go to a spot that we don't talk about a lot, but it's doing a little bit more paper. We're going to scroll down. Actually, we're going to scroll up from the dairy, up one spot to livestock, and then right in there to our old friend, the lean hogs. Nearly 17,000 contracts on the tape right now. So a little bit more paper going up today. So lean hogs putting up the numbers. Where are lean hogs trading right now? At a whopping 91.975. 91.975. So pretty much a 92 handle out there, listeners. Up about 2 points, or about a little over 2.17% this week. Of course, if we go back to last week's show, we have the lean hogs off 9.5%. So lean hogs, big movers to the dark side since our last show. What is the volume, you might be wondering, in lean hogs? By the way, almost 17,000 contracts, 73% of that going up in the October contract that has a whopping 36 days ago. We're going to hang out there. The vol is about a little bit shy of a 26, actually, 25.88, off about 0.9 points right now. So vol coming in a little bit. Skew-wise, what's up in lean hogs skew? Let's find out. Last week, the puts, 5.5% bid. This week, 3.3% bid. So puts coming in a little bit. Last week, the calls, 8% rich. This week, 0.75%. So the calls have collapsed. My goodness. Wow. They came for the call wing this week. I might explain it because the 98 calls were the big dog this week, doing 1,527. That's a heck of a lot for lean hogs. That's also a lot for, let's say, a Bitcoin or some of these other products we're talking about right now. That's a fair amount of paper. And pretty much 800 today, 400 on Tuesday, and about 300. Actually, 400 on Wednesday and about 300 on Tuesday. Back and forth, opening to closing throughout the week, which is kind of interesting. And right behind it, we have 1,324 of the pars, the 100 calls. Again, pretty active throughout the week as well. So a pretty active, truncated holiday week here for lean hogs, which again, not entirely surprising given the fact that they're off nearly 10% over the span of the past week out here. But it is all upside, which is kind of interesting. Looks like there was a lot of closing on the pars, so that could account for some of that call wing coming in a little bit. Also the fact that we're kind of gently drifting up now, but we're selling off before. So yeah, it's interesting. Interesting what's going on out here from a skew perspective. And also the 94 calls. So if 98 and the pars were too rich, too optimistic for your blood, allow me to present the 94 calls, doing 1,100 contracts this week. And again, trading actively back and forth, opening and closing throughout the week, but the big day again today. Today's the big day for lean hog options. Listen, let's go a little bit farther out, see if we can see any other interesting and or aberrant prints. What about the 72 puts in April of next year? Doing a whopping 100 today. And that's it for the week. I love these prints. And we also have the 60 puts doing a whopping 637. These are the 60 puts here in June of next year. All of that on Wednesday, all opening. So someone opening for size on the 60 puts. And that's kind of all she wrote for the June contract this week. By the way, looking at the skew in June, the puts actually came in a point. So not a heck of a lot of skew evolution. Those are pretty far out of the money. They're 40 handles out of the money. The future in June next year is a 101. But still, for all that paper and not much else, and not much evolution on the put wing, it's kind of interesting out here. So you know what? More paper than you might expect going up in the, shall we say, secondary ag markets out here, listeners. Kind of fascinating. I'm curious what you folks have to say about all this. In fact, speaking of you folks, let's get to some of you right now, a little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody. Welcome to your feedback segment here on the show. We like to get your thoughts. We also like to get your ideas on our questions of the week. Last week's question of the week, we asked you folks, market was rocked by Powell and was still down to start the week. When we posted this last week, we asked you if the second leg of the inflation sell-off will have legs, or will the bulls return with a vengeance? Quite simply, where will the S close at the end of Q3, which is now this month? Hard to believe we're in September already. I gave you four choices: north of 4,300, between 4,000 and about 4,300, between 37 and about 4,000, or below 4,000, and 41.2%. So the lion's share of you coming in for the 3,700 to 4,000 tranche, which is where we've been whipping around pretty much all day today. Then we have 21.6%, so a little bit higher, saying 4,000 to 42.99, which is, if we keep dancing on this 4,000 level, we could be playing with both of those tranches right up until the end of the month. Then we have an actual tie, 18.6%, which is very rare, for the two wings, for the above 4,300 and the below 3,700. So you folks, once it gets to the wings, you folks are evenly divided, which is kind of interesting. So intriguing stuff. Right now, the range we were heading towards and pretty much now in is winning the dance, 41.2%. Let's get on out to our question of the week. This week, asking you, there are many different indicators that people use to signal red flags in the market. Which red flag indicator is most important to your trading? Gave you three choices, and then, of course, we left room for the other this week because this one has a lot of different possible suggestions. We gave you inverted yield curve, the backward VIX curve, the death cross pattern, or other. And we have some other good suggestions for others. VWAP is a popular one. That could be one we could add in the future. Right now, 39.4% of you are choosing the old inverted yield curve, followed by 27.3% for the backward VIX curve. I thought this would get more love. It's still a day or two left. At options, a place to go, but I thought that would be maybe for our audience a leading indicator. But nope, inverted yield curve is winning right now. And then the old, fantastically named death cross, bringing up the rear, 24.2%. Then, of course, we have a distant other, 9.1%. If you have an other, if you have a choice, at options is the place to go to make your voice heard. Of course, you can always send in your questions, just like Felicia did this week. Felicia says, I notice you mostly focus on WTI crude oil on the TWIFO show. Why not include Brent in your rundowns as well? Well, Felicia and everyone else who asks similar questions. This week, WTI was our number 3 dark side mover, off 4.9%. Brent, as we mentioned, was number 4, off 3.57%. But again, this show is about the options activity going on over there at CME. And alas, Brent doesn't really hold a candle to WTI, at least over there at CME. WTI is doing 400,000+ contracts in a decent week. Right now, Brent has put up 567. So it's just an apples to oranges thing. There's not much to sink our teeth into, or we could spend days doing just these funky 1-point wide verticals in WTI. So there's a lot to sink our teeth into in one versus the other, where unfortunately there's not enough. If it did more paper, we wish things like lumber did more options paper as well. For whatever reason, they're predominantly focused on the futures. So we hang our hats in WTI, at least for right now. All right, everybody, that music means we have come to the end of our journey and the end of our broadcast day today. Back again tomorrow, listeners, with, it's hard to believe, yet another milestone. The network is just hitting milestones left and right out there. How would you like a volatility party that was a full decade in the making? You got one coming at you tomorrow. Volatility Views 500. Going live noon Central, 1 p.m. Eastern. Live for everybody. We're opening the doors for these big specials, for the big spectaculars. We got to open the kimono for everybody. So join us live tomorrow, noon Central, 1 p.m. Eastern. Fun guests, maybe some fun prizes going out there as well. All sorts of fun. So hit us up and join us in the great Volatility Palooza tomorrow, noon Central, 1 p.m. Eastern. Of course, in the meantime, you know where to go to check out all the reports we have cooking on this show. CMEgroup.com/TWIFO, the place to go for all that fun. Remember, those reports are active throughout the week, so not just during our showtime. You can check your old friend Lean Hogs, or in the case of Felicia, she wants to check Brent. You want to do it 2 a.m. on Sunday? Have at it. It's all available there for you. Of course, check out bantix.com as well, BANTIX.com, if you want to upgrade to the pro version of that data and see what else is lurking. We're just scratching the surface on what they have to offer there. And of course, when it comes to interesting data and analysis, volatility, COVID impact, recon, all that good stuff, and a whole bunch more, you know where to go to learn about all of that. FTSE Russell, FTSE Russell.com is the place to go to kick the tires and light the fires, listeners. Give them a follow on Twitter while you're at it as well, at FTSE Russell, all one word. Again, that's going to conclude our broadcast day today. Back again tomorrow for Vol Views 500. After that, for Options Oddities. Then back again next week, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.